Euro dollar. So the euro is still unsure of its next big move, with key levels above and below coming in at 110.60 and 107.96. A break above 110.60 would open the door for a more significant correction off that December 105.20 low towards the 113 area further up. But an inability to take out 110.60 followed by a break back below 107.96 would open the door for a bearish continuation back towards that December 105.20 low, which guards against the more significant multi-year base from March in the 104.60 area. Sterling dollar. So cable continues to adhere to a well-defined downtrend, making a series of lower tops and lower lows off the 2015 peak, and a fresh downside extension is now seen back towards the 2015 low at 145.66 further down. At this point, any rally should be very well capped ahead of 152.40, with only a break back above that previous lower top to compromise the current bearish outlook. Dollar yen. So dollar yen remains under pressure after breaking down below some key support, and the market is now focused on fresh setbacks down towards next key support in the 118 area, below which would expose the critical August base at 116.12 further down. At this point, any rally should be very well capped ahead of the 122 figure, with only a break back above 123.76 to compromise the newly adopted bearish outlook for dollar yen. Euro Swiss. So overall, the Euro Swiss recovery outlook remains intact, with the market eventually favored to break higher back above the September peak at 110.50 and towards the 115 area further up. But only a break back below 107.15 would compromise this outlook and force a shift in the structure, putting the pressure back on the downside. Aussie dollar. So Aussie has been confined to a choppy multi-week consolidation, though the overall downtrend here remains intact, and only back above 73.85 would compromise this structure. Until then, look for rallies to continue to be very well capped ahead of 73.85 in favor of a fresh downside extension back towards that recent multi-year low from August, just shy of 69. Dollar CAD. So dollar CAD trades just off fresh 11-year highs at 140.01 and just shy of those 2004 highs at 140.07, with the market consolidating recent gains, clearly confined to a highly constructive bullish outlook. At this point, there is risk for additional correction or consolidation ahead of the next major upside extension, but any setback should ultimately be very well supported ahead of that previous resistance, now turned support from that September peak at 134.57. Kiwi dollar. So Kiwi is trading into some key medium-term resistance around the 69 area, where a medium-term lower top is sought out ahead of the next major downside extension. If the market does establish above 69, this could compromise the bearish outlook and open the door for a potential structural shift. But while the market holds below 69 on a close basis, look for the market to stall out in favor of deeper setbacks in the sessions ahead. SPX 500. So the S&P 500 continues to show signs of the formation of a major top since stalling out most recently back in the month of November at 2117. That topside failure ahead of the May 2137 record high suggests that the market could be poised for a rolling over, with a break back below recent lows that we saw around 1993 to strengthen this outlook and accelerate declines back down towards medium-term support, which now comes in at 1870. Gold. So signs of the formation of a major base off recent multi-year lows at 1046, but the market will need to break back above some key resistance around the 1100 area to confirm this outlook, take the pressure off the downside, and open the door for an acceleration of gains. At this point, while the market holds below 1100, despite potential signs of a base, the pressure does remain on the downside, with risk for a break to fresh lows below 1046 and towards 1000 further down. Again, a break back above 1100 would be required to strengthen the potential basing outlook and accelerate gains.